Good morning, everyone. You've tuned into ET now. This is Market Fatafat, where we give you a comprehensive wrap for the 30 stocks you need to keep on your radar. Joining me on the show today is Soumya Sharma from the research desk. There's also my colleague Varun joining us right here on the show as well. And along with them is our guest, Vikas Jain from Reliance Securities, Amit Harchekar of Index Genius Investment Advisor. Thank you so much for joining in and welcome on board. Let's start with the stock number one. Then Aurobindo Pharma is a stock that we're tracking today. There's been a development as far as the US FDA approval is concerned. They've gotten approval for oral pilocarpine hydrochloride. That's the name of the drug. Aurobindo, in fact, is the 6th player to get an approval for the same, and that's the reason why it's in focus today. Moving on then to stock number two, a stock which is under pressure today, GIC, one of the biggest losers as far as the Nifty 100 index is concerned. Vikas, what are you observing on the counter? Yeah. Vikas, if you could just come in on GIC and tell us what your view is.
Yeah. Hello.
Please. I think we have snapped a line with him. We'll try to reconnect on a better line. Let's move right on to stock number three. Varun, you're tracking IDBI Bank. Tell us how bad were the numbers and what is the kind of stock move it's seen today?
Poor performance in Q1. NPAs continue to be a problem. Asset quality is being watched closely. Majority owned by LIC. Investors are are really stressed on recoveries for the bank this quarter, which haven't come in.
Coming in on IDBI Bank, their losses have widened, NII has dropped, and that's the reason why the stock is taking it on the chin in today's session. There's stock number 4, Trent, which is really looking very, very resilient. Amit, tell us what is the kind of pattern you're observing as far as Trent is concerned?
Well, Trent today has given a double top breakout, and that has opened a further room on upside. In fact, if you see on a long-term basis, we believe the rising channel resistance would now come in the zone of 495 to 500. So we believe at these levels, again, it becomes a good buy. You need to keep a strong stop loss at 440 and expect target of 495.
Trend for you, looking very, very resilient, up almost 4.5% in trade. Meantime, Soumya, Repco Home, how is the Q1 numbers?
Repco Finance, pretty much a mixed set of numbers. What's important is the company was able to maintain their NIMs and they were sequentially, they were stable at somewhere around 4.5%. Talking about the asset quality, there was slight decline out there, about 22 to 23% as far as GNP is concerned. Even on the overall loan book growth was at around 13%, led by rest of the India. So that's what, as far as Repco Home Finance is concerned, profits were merely up by 2%. However, NII saw a growth of over 7%. The stock's also gaining today.
All right. Meantime, Dr. Reddy's is not looking too healthy in trade. It's down by about 1.5 odd. Okay, almost 2% in trade. However, the news that we're tracking is not too negative. They've got a US FDA note for oral Physoterodine permit drug. DRL, in fact, is the 4th player to get an approval for the same. The medication is essentially used for treating overactive bladder, and that's the reason why Dr. Reddy's is also on our radar today on back of this US FDA nod. Varun, coming back to you once again, another private lender we're tracking, Yes Bank.
Hi, Karnia. So Yes Bank completed their QIP for around 1,930 crores. Now, it's a huge positive for the bank, but it also acts as a lifeline, and they will require additional capital to the tune of around $1 billion in the coming year. They're looking for a strategic investment, not just growth capital, and some of the key investors who might be interested are Society, Key, Square Master, and HDFC Trustee for the upcoming raise. We wish them all the best for that.
2,000 crores that we raised was only because currently the approvals that we had from shareholders was for a 10% dilution. Clearly, we have visibility. Clearly, we have visibility in terms of the incremental capital that we need to raise. And now it's a question of going back to the board and to the shareholders to be able to, get their approvals for a larger capital raise. We definitely believe that, in a relatively short order, we'll be able to raise the incremental capital that we need. But what this QIP does is gives us the time and the opportunity to assess the quality of investor that we want to bring in. I think the critical point to note here is that we are not just looking for growth capital, but we're looking for capital that is transformational, which would mean that we are looking for investors who not only bring in capital in financial terms, but also a lot of intellectual capital, which helps us diversify our businesses, differentiate ourselves as an institution in this country. That we are looking at private equity, a preferential allotment. We always have the option to do a rights issue as well. So I think there are multiple routes available to us. And given the fact that the genre of investors that we are currently looking at, we are keeping our options open with regard to what instrument we eventually adopt.
All right. Well, moving on then to stock number 8, Vedanta. In fact, the entire metals basket is really under pressure today. It's one of the sore losers in trade. Vedanta is actually leading the down move. And Vikas, tell us, what are you spotting on Vedanta?
Look at the stock is witnessing also equal amount of bounce. It has made a double bottom near to 135 odd level. So we believe that support should hold on. One should use this opportunity of this decline to add positions with a stop of 135 for a target of 150.
Okay, that's the word coming in on Vedanta, which is down more than 2% as we speak. Moving away from metals to another stock that's in focus and it's actually looking quite resilient is CESC. Amit, how are you reading into the chart pattern for CESC?
Well, CESC still remains into a consolidation zone. In fact, if you see from a long-term perspective, the neckline of inverted head and shoulder is placed at around 825. So I would wait for this breakout on a closing basis and only then initiate a buy. Till then, I would avoid. Though the stock is looking weak, but we need a good confirmation. At least 2 days closing is required in order to initiate fresh longs. Only after 825, we can expect a target of 900 plus.
Okay, that's the word on CESC, which is up and away in trade. Moving on then to HDIL. Soumya, what's the update?
Well, currently, the company came out with their earnings, and I must say that they were pretty much weak set of numbers. Talking about the top line, it saw a degrowth of over 44%, and that similar trend was also reflected in the bottom line, wherein the PAT's profit was actually down by over 65%. So this clearly isn't being taken well by the streets as well, and we're seeing this downfall coming in the stock, losing close to about 3%.
All right, that's HDIL for you, looking quite beaten down in trade, down almost 3%. Meantime, another stock that's looking quite weak is Tata Motors. There's been a bit of an update as far as the production is concerned. Tata Motors is all set to go for their third closure from August 16, which is today onwards. Do remember the sales have been very weak. Sources from within the company continue to say that even now the offtake, wholesale book is looking very, very weak. So that's an update coming in from Tata Motors. Additionally, CRISIL has downgraded the long-term rating from AA to AA minus. The reason that they've stated is the weakening of outlook on the business risk profile of JLR, which seems to getting even worse by the day, and that's the reason why they've given it a thumbs down and a slight downgrade from AA to AA minus. That's why we're also focusing in on Tata Motors today, which is one of the top nifty losers. Meantime, Vikas, Biocon, another stock which is looking quite weak today.
Yeah, the structure is being pretty weak and it's almost ready near 250 to be closed. We believe unless and until the stock does not cross its short-term moving averages near to 233, 234 levels, one should wait. Unless and until if it gives a breakout above those 234, 235, then it could consider as a buy.
Okay, that's Biocon for you, down almost 3% as we speak. Let's quickly pull up the Rise with India small case index as well to check the levels it's perched at and how it's faring in trade. Do remember the markets at large are looking quite weak. There's a widespread weakness, whether it's the benchmark indices or the broader markets. And even if you look at the Rise with India small cap index, we'll give it a moment to see how it's doing really. Okay, slightly flat in trade. It's down by just about 0.04%, so largely unchanged. 510 rather is the level that it's managing to hold on to. Moving on then to stock number 13, Varun, HEG. How was the Q1 performance?
HEG saw a significant decline in revenues and profitability. Revenue declined around 50% and profitability declined around 68%. Now, EBITDA was also down. Revenues and profitability took a severe hit this quarter. Now, electrode prices seem to be normalizing. Global capacities may be coming on stream. And, overall demand in the steel cycle or commodity cycle weakening has also impacted the company this quarter. It'll be interesting to see what develops for the rest of this year. We'll wait to hear from the management on that.
That's HEG for you, trading at 950, 955 odd levels with a loss of 5% in trade. Amit, NMDC, another name from the metals pack that's bleeding today.
Well, I think if you observe the last 1 year movement in NMDC, it has been trading in the zone of 93 on the lower side, while on the upper side 116 to 120 continues to remain major supply zone. We believe there is one more leg of down move which is left in NMDC, which could force the stock to test 93 before a meaningful rebound. So right now the recommendation would be again, it would be a sell, and we are expecting a target of 93.
All right, that's the word coming in on NMDC. Soumya, Glenmark, what are the brokerages saying about the prospects of the company and the future growth trajectory?
Well, Karuna, after posting those weak set of numbers, the downward trajectory as far as Glenmark is concerned continues, losing for the third straight day. The profits for the company had halved during this quarter. As far as CLS is concerned, they're maintaining their sell stance, and they've also cut the target price from 500 rupees to 350 rupees per share. They add that the earnings growth is expected to remain under pressure, and they've also cut their FY 2021 EPS estimates by over 15 to 18%. So clearly, this is one stock that's under pressure, losing right now 5%.
All right, with that, we'll slip into a short break. There are quite a few more stocks to watch out for on the other side when we come back after the break. Welcome back. You're still watching Market Fatafat right here on ET Now. Let's get on board with our stock number 16, which is Indiabulls Real Estate. The stock may be trading flat, but it's on a rather weak open. It has recovered a fair bit from those lows. But yes, as far as the development that we're tracking is concerned, it's the Q1 report card and a whole host of other updates. But yes, if you look at the Q1 performance, it's been very, very dismal. They have reported a loss of 120 crore rupees versus a PAT of 118 crores on a year-on-year basis. Their margins have also not shown any improvement. They've come in completely flat at 30.5%. However, if you look at the management commentary, it's quite interesting and quite encouraging. The management aims to achieve zero net debt in the current fiscal itself, which is FY20. They look to divest their commercial and leasing business to PE firms. What they're essentially targeting is 4,400 to 4,800 crore rupees. They look to divest London, a divestment as well, at an enterprise value of 200 million pounds. So that's the update coming in on Indiabulls Real Estate. The stock is trading flat as we speak. Meantime, Divi's Labs, Vikas, how is the chart pattern looking like? What would be your call on this counter?
The stock has been lately pretty weakened over the past few weeks. It has been trading in pretty below its short-term and the long-term moving averages and also pretty sharp with high volumes. We believe this stock will majorly underperform even from current levels. The stock can even test 1420, 1430 over the next few days.
That's the word coming in on Divi's Labs. Meanwhile, MotoCorp is looking fairly upbeat. It's up by almost 1%. But the news that we're tracking is not very positive, Varun.
Yeah, Karanya, surprising stock action given that Hero announced a plant shutdown for the next 3 days. Now, while part of this was planned, management says it's clearly a reflection of the current market demand, which hasn't been that strong. Motorcycle sales are indicative of the overall economic condition. They have been historically in India a good indicator. And given that monsoon now seems to have caught up and the majority of motorcycles being sold rurally, we hope to see the demand pick up in the coming quarters.
Okay, looks like these shutdown woes are, just another update when it comes to auto companies, because they've happened so many times in the recent past. The stock, meantime, is looking quite upbeat, up by almost 1% in trade. On the other hand, there's a Tech Mahindra from the Nifty 50 index, which is once again under pressure, just like many of its other IT heavyweights. Amit, what's your view on Tech Mahindra?
Well, Tech Mahindra remains one of the weakest stock within the IT pack, and if you see on our long-term charts, in the month of July, the stock has already breached the support of 714, which turns out to be the support of rising wedge on a monthly basis. We believe now the stock has a more scope of downside in the near term. From a positional perspective, we are looking for a target of 540, which could be achieved in next 3 to 4 months. However, in the short term, we believe 580 could be an area where the stock could stabilize at. So at these levels, again, the recommendation would be again going short even at these levels with a stop loss of 680, and we are expecting target of 580.
Okay, that's Tech Mahindra for you. Meanwhile, Soumya, Apollo Hospital is flying in trade. Tell us what's the update.
Well, Karuna, this one's definitely seeing growing investor interest given the fact the company posted really good set of numbers in the Q1 FY20 and reporting a twofold jump in the profits. As we speak, the stock is gaining close to about 6.4%, and in the last 2 days, we've seen the stock gain close to about 8%.
All right, another stock that's buzzing in trade is in Indraprastha Gas Limited. They delivered their Q1 report card, and it's been a good quarter. Profits have grown 31%, revenue is up 22.5%. EBITDA has come in at 391 crores versus 310, so clearly a good growth of about 80 crores on a year-on-year basis. Margins have also grown almost 70 to 80 basis points, 22.5% versus 21.8%. So that's something that's fueling IGL stock move in today's trading session. Let's move right on to another name from the financial space. It's SBI Life that we're tracking. Vikas, how are you reading into the chart? What are your observations?
Stock has been a consistent performer. If you look at the stock faced multiple broad deals even in discount, and then does in the stock bounce back, and it is trading at all-time high. We believe the positive momentum would continue. The only thing is that the stock has been trading at all-time high. We believe for fresh investments, one should wait for some declines near to 780, 785 points.
All right, that's SBI Life for you, looking quite upbeat in trade. On that note, I think we'll have to wrap it up on this edition of Market Fatafat. That's all the stocks we'll be able to cover in this edition. Thank you so much, Vikas, Amit, Varun, as well as Soumya for joining in, and thanks to our viewers for tuning in.